Assalamu alaikum. Distinguished guests, Your Excellencies, good afternoon, and welcome to the Islamic Finance Summit of the Abu Dhabi Finance Week 2025. My name is Osama Ali from ADGM Academy, where we focus on advancing financial education and regulatory excellence. It is my privilege today to moderate this session titled Standardization and Shariah Compliance and Shariah Regulations, Building Trust and Projects at Scale. As Islamic finance advances and expands internationally, the need for consistent regulatory and Shariah frameworks is more important than ever. Harmonization doesn't just help investor confidence, it also helps with the cross-border collaborations and innovation of products. So today we are here with a great group of panelists, global leaders in the Islamic finance landscape. Mr. Azamat Tulubai, the Senior Managing Director of Eurasian Development Bank, overseeing major projects. Mr. Rinat Biktrov, the Governor of the Astana International Financial Center, leading Kazakhstan's role in Islamic finance. And last but not least, we have Arifa Ala, who's the Senior Assistant Governor of the Central Bank of the Philippines, advancing regulatory frameworks in Islamic finance. So today we'll explore how harmonization of those regulations will help build trust and projects at scale. Let me start with Mr. Azamat. I have a question for you with regards to development banks. Now, development banks are known for their role in growth, market growth. But I want to focus today on standardization of Sharia regulations and how development banks help that cause.
Yeah, thank you very much. And assalamu alaikum to everyone. This is a great honor to be here. First of all, let me express my gratitude to the hostess, the organizers for having such event. And I'm really proud to be part of this dialogue. From our experience, I am the managing director at the Eurasian Development Bank, so I oversee the project team in Central Asian countries. Therefore, I will speak from the project experience of the bank. So what we experience in Eurasian Development Bank, the projects that we do in Eurasian Development Bank, for example, let's assume in Kazakhstan, this becomes one of the successful cases for other countries we operate. So this actually becomes standard in terms of where, let's assume we made the project energy sector, and this becomes standard for all other countries, for all upcoming projects, for all other sponsors. This is way we are actually standardizing the Sharia compliant principles for all our projects where we operate. The second one that I want to express that all MDBs actually has their internal rules in terms of the risk, compliance, and Sharia frameworks. And this actually becomes as the standard for all the participants in the deal. Let's assume we have another project where all these stakeholders come up, and once the bank has internal policies, this is getting applied for all the stakeholders when we are doing the deal. This is the point where actually the MDBs put their internal policies as a standardization for their deals. And the second and the third one, this is the most interesting, that the MDBs does the large infrastructure projects, especially when there is a cross-border projects, there is a syndication is formed. Once we have this syndication, and EDB has different projects with EBRD, IFC, Islamic Development Bank, and other reputable organizations, and what we do and what we experience that all the MDBs actually enrich themselves in the syndication deal. Once they do the deal, over time it becomes the rule for their internal policies, and they enrich by themselves implementing their experience in the projects where they operate in the member countries. Therefore, this is the crucial role, key role of MDBs putting the standardization for cross-border projects, especially for the Islamic finance.
Thank you, Azamat. It is really good to see how the link between development banks and those regulations. So if I move on to Renat and basically touching on the same point, but from a slightly different perspective. So what I want to look at is how the International Financial Center, Astana, promote those unified governance frameworks, especially with projects at scale.
Thank you. Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you, everyone. It's my pleasure to be actually on this Islamic Summit second year in a row and discuss the development of Islamic finance. For those who don't know, Astana International Financial Center is the ADGM in Kazakhstan, basically common law-based jurisdiction in a civil law-based country. We're 8 years in operation, home for more than 4,800 companies registered. And one of the areas that we focus is definitely Islamic finance development, as there is a very big growing population of practicing Muslims, not just in Kazakhstan, but in the countries nearby, like Central Asian countries, like the south of Russia, Tatarstan, and etc. So there is definitely a demand, because we're starting to feel that big chunk of the population is getting unbanked. They don't have a fair access to the financial services and etc. And to take it further, because we had a Sharia governance rules, it was like an open architect. So every market participant have their own Sharia advisory board and etc. Because you don't want to make the regulation too strict. But now we made a step further. We created an Islamic Finance Advisory Board. Yesterday here, actually in Abu Dhabi, we had an inaugural meeting of our advisory board with the participation of such scholars as Dr. Al-Suwailem, Dr. Adnan Ahmed Yusuf, Dr. Azan Hassan, and some other prominent experts in the field. So there are a few models, as we discussed. There are countries who have, again, more open model, decentralized, where market participants have their own Sharia advisory boards, like Singapore, like AFC. Then there are centers or regulators who have kind of two-tier. You have your own advisory board, but there is also centralized kind of Sharia, the board that oversees the jurisdiction and sets or certain signals or does the explanation. I think Turkey is like that. And then the IFC, I think, also more open. And then there are more centralized, where everything is like a central regulator in traditional finance sets and explains all the standards. So these three different models with their own benefits, from more clear regulation to more open. We are somewhere in between because the Islamic finance in our region is very new, so you don't want to impose yet certain hard regulations, and you want rather the market to find its ways. But again, the same discussion that happened yesterday, the harmonization of governance, of rules, explaining them, we should get at some point there. And it's not just only on jurisdictional level, but even internationally, right? In traditional finance, like in capital market, we have IOSCO that has kind of trying to harmonize the rules in many countries. We have Basel and etc. that kind of on the banking. So I think in the future we will get there, but the problem is that all these jurisdictions, especially in Islamic finance, are in different phases. We had only like few years of history of developing and having more structured Islamic finance. But we are committed to it so far. We have already in last few years first pure Islamic bank for retail. We have issued finally last year, the end of year, first pure AFC originated sukuk. It took us 8 years, as I said. Last year we were just discussing the potential of happening, but it's finally happened. So we're making these small steps, and what we're lucky with is to convince our traditional regulators on kind of mainland of the Kazakhstan to carve out Islamic banks from the regulation that restricts banks in AFC to work with the local currency and to work with the retail. It may sound in UAE different because you have like different emirates and they can do their own rules, but in Kazakhstan, where it's unitarian, one country, to convince central bank to give us that access wasn't easy. So again, harmonization is good, but also we cannot choke the market and give more freedom to come up with the solutions.
Great. Thank you, Renat. In fact, there's a specific point that you mentioned about decentralization, which really leads me to the question that I wanted to ask to Arifa. So, from your perspective, not so much focusing on the centralization, but I want to know some of the lessons learned from Philippines' advancement in Islamic regulations, especially for a non-Muslim majority country.
Yeah, thank you very much for that question. Assalamu alaikum. It's my pleasure to be here in the Islamic Finance Summit. You know, our experience in the Philippines has proven once again that Islamic finance can flourish even in a non Muslim jurisdiction like the Philippines if the vision is clear and the commitment is firm. In my view, the three key lessons are the following. The first one is there has to be a legal framework, a strong legal framework in place. For the longest time, as you may know, we have one of the oldest Islamic banks in the Philippines, which is the Al Amana Islamic Investment Bank of the Philippines, which has been established since 1973, but it has not really become a full-fledged Islamic bank because of lack of legal framework. And we had that law in 2019 when that law was passed. It practically opened the financial system of the Philippines to other players. Before the enactment of that law, we cannot allow other Islamic banking players to operate in the Philippines. But with that law, the system now is open to other players, whether domestic banks or foreign banks. Of course, the law is a short one, but it's complete. It also mandates the government to do capacity building on Islamic banking and finance. It also provided for tax neutrality. The second lesson is there's a need to collaborate with other stakeholders. So we did whole of government approach. We create an Islamic finance coordination forum, which is chaired by the Central Bank of the Philippines. We have members from the Securities and Exchange Commission, from the Insurance Commission, the Deposit Insurance Corporation, even accounting and auditing standard setting bodies in the Philippines, because we want to ensure that the implementing regulations are synchronized. If we want to establish an Islamic finance ecosystem, you also need to develop the Islamic capital market and the takaful industry alongside the Islamic banking system. So we have that in place. And the third one is you had to link this to a national agenda. We have a financial inclusion agenda in the Philippines. About 10% of the population are Muslims. They are in the southern part of the Philippines, and we wanted the national government would like to provide them the financial products and services that they have been longing for. And this is the way that the national government has made that. And now we have 3 Islamic banking players and takaful operators. So I'll stop there.
Excellent, excellent. Great. So thank you very much for that account. Now, what I want to do is I have a question for all of you, but we'll stick with Arifa. Basically, if you can take us through some of the barriers that will come in the way of ensuring consistency in Islamic regulations interpretation from your perspective, and maybe how collaboration can help overcome that.
Well, in my view, I think it is inherent because there are, I think, at least 4 school of thoughts in terms of interpreting Sharia. So it's quite difficult to have really an internationally uniform standards. So what we need to do is to have at least a consistent national approach on what is Sharia compliant and not Sharia compliant. Second, we need to align with international setting bodies. The more nations would adopt those standards, the more cross-border consistency can be achieved. And the third one is we need to do capacity building so that the nation, the different stakeholders, the players, the customers of the financial institutions are well aware about the Sharia principles.
Excellent. Great. So, Renat, from an international financial settlement perspective, what would those challenges be?
Well, first of all, the different phase of or maturity of the Islamic finance market in the countries, and then again for countries with the small capital like ours, you want to bring international capital, but then you want the international investors to believe, to trust in your regulation and understand it. Yeah, so exchanging ideas, at least harmonizing the regulation, I think is key. Another challenge is the lack of human resources or scarcity, again, in the new jurisdictions like ours. That just you need time, and you also need experience sharing with more mature jurisdictions.
Fantastic. Azamat, from a development bank perspective?
Yeah, from our perspective, actually, we are totally in line with what Rinat said, and just to add from our side, that what we experience that regulators and the Sharia board can actually they work in parallel. But the business itself and the projects they need to move forward. They have their timelines, deadlines, and they need to go forward. That's why MDBs actually can step in here and be the translator for the Sharia board and for the regulators, understanding both languages and finding the right solutions, and can be the platform for all the stakeholders to have that solution for the project. For the second point that I want to emphasize, that MDBs can actually have their funds. Some of the MDBs have their own funds. They can provide the grant basis for the projects to make it bankable. For example, at EDB we have special funds that we can use on the grant basis and prepare the projects on the bankable basis. And here, this seems actually like a technical stuff, but when it comes to the project, this actually reduces transaction costs. This creates the certainty for the investors, and they actually come up for the project, especially for cross-border projects, when there is different jurisdictions, they understand how it might work actually. And the third one is that I want to emphasize, that the MDBs are not under the pressure of the benefit or the profit from the project. They are not about the profit from the project. They are not looking for the interest rates, but they can be every project has some contradictions in the stakeholders. So what we experience, that the MDBs might be the platform to come up all the stakeholders and find the right solution. They are not about the interest especially for the cross-border projects, for the national interest of the specific country. They are for the benefit of the project. They are based on the risk profile. So they find the solution where we can actually fit for the project and for the stakeholders of all parts. So from our experience, that we see that the cross-border projects is not about the rules. It's about repeating, finding specific projects that has been already installed. And once we install such projects in different countries, we can actually find the standards that we can move forward in terms of Sharia compliance.
Great. So I'm going to follow that up with you, Azamat. And if you can briefly tell us how collaboration can reduce contradictions or duplication in standards.
So that's what I meant, like in my first actually answers, that the MDBs, they work in several countries. So once, for example, like we have set up at let's assume Bacala project or any other Islamic finance product, let's assume in Kazakhstan, this will be the standard for the Kyrgyz projects that we operate, or vice versa. Once we have the Kyrgyz project, we can operate in Uzbekistan. And this actually will have the same view for all countries that we will operate.
Okay, great. Thank you. Thank you very much. So let's move back to Rinat from an international financial center perspective and look specifically how the integration between conventional and Islamic finance systems be aligned, and how can we ensure to maintain Sharia integrity?
Yeah, well, first thing we've again talked about it is a lot is the harmonization of regulation and Sharia governance, right? It's still like, again, capital has to be able to flow freely between the jurisdictions, countries, right? But for that, the capital should feel comfortable, understand the rules. Again, this is a huge challenge. Other ideas, I think we need to find bridges between other areas of finance. For example, sustainable finance, all this ESG, it complies with it is so close to Sharia. So as the growth in sustainable finance, in ESG standards, this is definitely that Islamic finance can work in the same space. So I think we have to use, and we are, so you can issue like a sustainable Sharia compliant bond, for example, right? So I think this is a good area. Another, I think, in accessibility and democratization of finance for retail is fintechs has played great role. So I think in Islamic finance as well, this is the great path. And fintechs think a little bit different. They put the client in the middle, right? And then the demands and the interests of the client and etc. So I think the fintech development of fintech can really give boost in terms of the retail proliferation among retail of Islamic finance. But there is a big problem, and we again discussed that, that needs resolution for institutional clients. It's infrastructure and especially liquidity management. This is a huge problem. And like all those who studied finance, conventional finance, we all know TVM, right? Time value of money. That concept kind of drives the whole treasury and money market and etc., which is not directly, I guess, applicable in Islamic finance. But we have to come up with an alternative because, again, liquidity management, managing your risks and treasury, this is a huge area. And if the regulation and Sharia governance can resolve, we can resolve it, I think that can give a huge boost to institutional participation.
Absolutely. So thank you very much for that. I think that leads us also to central banks. Now, we know that international financial centers would incentivize financial institutions, but I want to look at it from a central bank perspective. So if you, Arifa, can tell us how central banks can incentivize financial institutions to adopt Sharia compliance regulations voluntarily?
Well, you have to create an enabling environment. For the Philippines, our approach is really to provide level playing field for the Islamic banking institutions. So we have provided tax neutrality. Without that tax neutrality, the products of Islamic banks would be more costly because it has higher tax implications, and we have that in place. We have also amended the respective charters of central banks, the Deposit Insurance Corporation, so to give them authorities to design Sharia compliant facilities that will operate or support the operationalization of Islamic banking windows that will be established by conventional banking system. It's also very important to increase awareness and understanding of the players and the customers. Because in the Philippines, while we have one of the oldest Islamic banks, knowledge on Islamic banking is very minimal. And so the central bank has been hosting many briefings and workshops to educate, short and increase understanding on Islamic banking and finance. And of course, we provided some reliefs because there are birth pains in terms of operating Islamic banks. So in terms of reportorial requirements, we've given them a period of time for them to familiarize themselves with the mapping of the Islamic banking transactions to the financial reporting package being submitted to the central bank. And lastly, even in the way that we're not also penalizing them in case there are errors in the reports. And even in the creation of their Sharia, because our approach is we have pushed the responsibility of Sharia compliance to the financial institutions. So we've given them period of time within which to create the Sharia committee. We've given them flexibility to just have one Sharia consultant for the first 3 years of operations because we recognize the difficulty of finding Sharia scholars within the Philippines. So those are some of the initiatives that the central bank has taken.
Great. Now that leads me to our final question, and this is more of a reflection question that I would really like the audience also to have a think about from your own perspective. We'll stick with you, but we want a very brief one-liner input from every one of you. And the question basically is, what does success look like in terms of what sets the stage for the next phase of building trust in Islamic finance? So if we can have a very brief word from you.
Okay. I think there has to be more of like regulatory alignment across different jurisdictions so that the customers and even the financial institutions themselves would have confidence in terms of predictability of the products and services that they are providing. Of course, we all know that digital way of doing things is the fad now. So there has to be technology-driven transparency also, allowing them, like in the Philippines, we've allowed sandbox. We have a framework for sandbox. If Islamic banks would like to do digital banking operations, is also can be accommodated in the digital banking framework of the Philippines. And lastly, we should not stifle them from innovating. I mean, we're doing this also for the conventional banking system as well. So our approach is whatever is available for the conventional banking system, it should also be made available for the Islamic banking institutions. Thank you.
Absolutely. Renat?
Same. I have to repeat. I mean, like, how do we build our trust, right? By understanding that there are a set of rules, everyone knows them, everyone understands them, and everyone respects them, obliges to them. And if someone breaches it, they will get punished, right? And the system does not allow that. So same in the Islamic finance, I mean, we discussed the difficulties, but for it to boost and the people to gain trust, we kind of have to have at least the rules that everyone understands and agree to. But it's a huge challenge, and we've been discussing it for the last 30 minutes, right? So if we can, as a global community, or at least maybe starting regionally, move into defining those governance rules that we all agree to and respect, and then we test it by the transactions and etc., that's the building blocks necessarily for trust, I believe.
Great. Azamat, any last words?
Yeah, from our perspective, what we see that we all mentioned that like different countries has different levels of developing the Islamic instruments. Some countries are well advanced, some are still on the way they're building the ecosystems. What we just like announced it as Eurasian Development Bank, like last year we announced that we are going to build inside the EDB, the Islamic Window Department. So we have built that. After that, we announced that we will adopt the internal rules with Shariah compliance. We did that. After that, we announced that we are going to make the first projects and move forward. What I'm saying that here, all this was done with the support of Islamic Development Bank. What I want to say that once the initiative is there, everyone who is in the market, who actually all went like far away and has different experience, they need to support such institutions, such of initiatives of others who are still on the way. I think this is actually the success to reaching for the Islamic instruments.
Great, thank you. Well, thank you very much, our distinguished panelists, for a great discussion. We've learned a lot. I think we can conclude that harmonization and standardization of Sharia compliance regulations will pave the way for helping investor confidence and cross-border collaborations, as well as innovation in projects. These collaborations are very, very important to build trust in Islamic finance and transform projects at scale. Thank you. Enjoy the rest of the day.